Let's talk about Expedia. Their symbol is EXPE, then the travel services industry. I just used these today because we're looking at doing a trip down to Cabo, and I was trying to find some flight, and that's where I went to was Expedia. But 7% short on the float there. We do see the PE ratio 27.4 versus 22.4. I do remember at the time Expedia had no PE because they had no earnings, so they've kind of turned that around. But price of sales 2.7 versus 2.8. Book value very expensive, 26.1 versus 7.1. I think that's because they had probably so low amount of tangible assets. That's probably what the deal is there. Price of cash flow 10.1 versus 12.1. We do see the PEG ratio 12 versus 0.5, and that's very expensive because that's your price earnings divided by growth. You're paying a lot for the future growth on Expedia. That's not good at all. Earnings up 16% over last year, did beat the industry, down 12.5. Sales are up 5% year over year, industry up 9.3. 5-year growth rate, not so good, 2.1, says the industry is up 11.6. They do pay a dividend, very small dividend, 0.6%, using 11% of their earnings to pay that out. Taking a look at the balance sheet, current ratio on the low side, 0.7 versus 1.1. Debt to equity, very high. 4.9 versus 2.2, and I have a feeling based on what I'm seeing on the numbers, I think they have very low equity because it's just not a high equity type business. I think a lot of cash flow coming in. We do see the intangible assets also high, 30.6, net profit margin 9.7 versus 12.4. That is okay. We do see return on equity 103.8. Yeah, this company probably has no or very little equity at all. Cash flow, a little bit disappointing. Free cash flow is about $3 billion, but the industry's up $4 billion. So I was kind of hoping to see that number higher. What do you got going for it, Jace?
Yes, so current price here for Expedia, again, their ticker symbol EXPE. It's $285.11. 52-week range. The low here, $130.01, and the high, $303.80. We did see a little bit of a pullback in the stock this past week. Shares of travel-related names, they did get hit on Wednesday. There was a potential China crackdown. And then also, too, there's an industry group reported that 6% fewer foreign travelers visited the U.S. in 2025, while the World Travel and Tourism Council said that trend occurred even as global tourism spending actually rose in the year.
Wow.
So, the only thing I'm not sure of, and I was trying to find it, I couldn't find it quickly, was the percent of travel here in the U.S. that's done by foreigners compared to, obviously, U.S. citizens.
Yeah.
Because, as long as the volume's there, it doesn't matter if it's coming globally or internally, it's still going to be beneficial for an Expedia. And the thing I was curious on is they do actually own VRBO and some other names as well. VRBO, it's like a competitor to Airbnb.
Oh, I didn't know that. Okay.
Yeah, I've actually used them before, and it's interchangeable. It's kind of like Lyft versus Uber, pretty much the same
thing.
Same concept. But looking forward for Expedia, I was hoping for a little bit more excitement here, but unfortunately, we go out to December 2026. Estimated earnings per share $17.96. Gives a target sell price of $298.14. So not much appreciation above that current level, again, about $285 a share.
And I will point out, I see 26 analysts, but the low estimate's 1549, the high's 2037, so not very tight there. However, over the last 90 days, that estimate is up from 1660 to 1796. That's an 8% increase. So they're seeing better things going forward with Expedia. And I like the company, but it's just there's no value there. There's no and I didn't look at the balance sheet because we're kind of running low on time here. But I know they have a very low equity, and what I've seen on the website that I'm trying to get flights is very good.
Yeah, I mean the thing I like about Expedia though is kind of like our business here. You're so asset light, right? When you're a website, you don't really have as many probably buildings. You don't have equipment. So, I mean, I don't know the ins and outs of the business per se, but I can't imagine there'd be many assets that you would hold for a company like Expedia.
And that's why I was kind of hoping for the higher free cash flow number. Thinking, gee, this is going to be a cash flow generator. Yeah. And that's just great, but it's not. And their dividend, what did I say their dividend was? It wasn't great.
It was pretty low, actually.
Pretty low, yeah. So if they had more free cash flow, they could pay more dividend, reinvest back in the business. But again, it's just disappointing.
Yeah, 0.5% is the dividend.
Yeah, that's just not very good.